Kim is now joining us. He's head of global research product at William O'Neill and Company. Dean, good to have you with us here. Thank you very much for your time. You want to start with the 3.5%-4% cuts in the small and mid-cap indices here in India yesterday. Technically, Dean, how are things looking after yesterday's session?
Yeah, I mean, we have pretty interesting action in India with small cap index declining over 3%. Many extended small caps broke below 21 and 50-day moving averages, and small caps rallied by 35% since establishing a low back in March. So it's not that surprising to see the market taking some profit. And as I spoke about last time when I was on, we would advise to keep a close eye on the chart, and particularly if it breaks the 50-day moving average and doesn't bounce from there. I think you ought to start trimming. Interestingly, I took a look at the constituents in the BSE, call it 4,800 stocks on there, and roughly 80% are considered small mid caps, and 10% of those is actually extended by about 50% above the 200-day moving average. So those are the names that are particularly vulnerable. And so we would advise to, keep a track of the charts and start to trim positions below the 50-day moving average.
Okay, start to trim positions below the 50-day moving average. But Dean, how are you feeling about the large caps? The market has been, trending higher, led by a lot of the large caps, whether it's in the IT space. Banks have come back in a big way. Some large caps like Reliance are also starting to participate. Where do your preferences lie now?
Yeah, I think in the large cap space, we find, ideas across different sectors. So that's good news. So the breadth is still very good. Tata Consultancy, for example, it just broke out from an early stage base. I think that one looks really interesting now. Cipla is another one. And then Varun Beverages, I think those two are looking really solid, as well as TVS Motor, KEI Industries, Solar Industries. So there are, good large cap names that are just breaking out from early stage bases. So I would focus on those.
Hi, Dean. Good morning. As a house, what kind of a view do you have on crude? For India, it's a bit of a worry. Everyone's been saying that crude now will fall. It's moved from around $65 just a few months ago, I think 6 months or so ago, to around $92 per barrel. That's a worrying sign, right? What's your view on crude?
Yeah, I mean, crude is steadily rising, and it's all fabricated by the OPEC producing countries. So at some point they're going to ease off. We don't know when, but I don't see particularly huge spikes coming in terms of price. So that's good news, because demand for crude across the globe is sort of tempered at the moment, particularly with China sort of struggling. And so I would expect to see crude kind of stabilize and come off in the future. It may take several months to do it, but I don't see any kind of negative shocks in that area.
So you said TCS and Cipla look like they are interesting bets at the moment. So that's the IT and the pharma space that you're veering towards. What about banks? They've also come back, although HDFC Bank has been underperforming, but the others are not too bad. Anything in that space that you like?
Yeah, I think Punjab National Bank stands out. That one just, broke out. And then you have banks like IndusInd Bank, ICICI. Those are all setting up. And we just need like 1 day of good, pretty good price performance and volume to get pretty excited by it. But they're getting ready to break out, in my opinion. Yeah.
Okay. Dean, just to circle back to the advice on mid and small caps, would you say that, say, for example, I'm looking at the mid-cap index, right? It's closed at, if you can have the chart up, it's closed at 40,170. Would you look at the 20-day simple moving average as a bit of a marker on the downside? That's at about 39,240 or so. Not very far away.
Yeah.
Would you look at those, the 20-day for both the mid and small cap indices? Sorry, go on.
Yeah, that would provide support there. I think it's important to see that the index kind of bounce from that level. If the sell-off continues, perhaps on the back of worries about the oil price and depreciating rupee, that would make logical sense. Should that happen, I think the next level you would be looking at is the 50-day moving average. I would particularly pay attention to those stocks that are way above the 200-day moving average.
Got it. All right, Dean, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So that's the word coming in on the technicals of the market and how they are stacked up at the moment. Remember, there was a sharp slide that we saw in mid and small caps yesterday. But on the